Hello, it is the 27th of April 2011, and let's go ahead and take a look at this gold market. This is a 60-minute chart spanning back to pretty much the start of March, and another all-time high, gold reaching 1527, and most likely at least a little bit higher when you're watching this, and that all depends on when you're watching it. It could be 4 or 5,000, well, if it's much later on and you're watching this as an archive. Who knows? Anyway, let's take a look at what's going on right now as far as today. What I noticed that's really unique about this new high is every time it's been making new highs, silver already beat them to it. Because every time silver makes a 31-year high, what usually happens is gold's usually, and say for example in a range like this, they're like somewhere in here when they make type deal. So silver makes a new high, gold goes here type deal. That's what I've been expecting. Now it's the opposite. Silver is the one that is not making a high, but gold actually is. Now, what's also interesting is this correlation here. You're in a trend, you're building these higher lows, so another low has been established. 1500 is a good psychological mark. And also the inverted head and shoulders pattern that I was talking about that had a break or had a level target towards 1500 is now being used as support. That's also another strong indicator showing sellers weren't too eager at a level where it ran up a decent amount to get out of positions. As far as trend lines are concerned, this is probably the most relative support level, and if we draw this up and connect the most points, you'd have to think that this is the most significant one, and it's breaking through it. If we at least connect it from the most highest of peaks, then you're at that level. So the odds are showing that if you come back and only find this amount of a retracement after you were there for several hours or a few days, then that gives you bullish sentiments. Now, it is a little overextended on the short term, and it does need to pull back at some point, but it's very common for it to continue to go up and towards these levels before you get some sort of correction, either through that of price or through time. Now, as far as the Fibonacci levels are concerned, this line and this line, what's important to note is this really means nothing right now for support. What it means when you're breaking out is that these levels are increasing. As you make new highs, these will continue to go higher. At some point, they will work out to be that of support you will look into, but not for now. And if you're looking to see where this would go, obviously here's one example. Literally, if we don't top in this area here, then it's going to probably, in the next so many days and weeks, bring explosive moves to make this line match up in this somewhere in this area in here. Because there really isn't as much for resistance in the 1480s, 1490 area, where there is right now in the mid 1500s. And as far as everything else is concerned, that's pretty much about it. This gold market has really underperformed versus the silver market, and if gold does happen to have a big move, then most likely what the most probable situation I would think is that silver would continue to gain and most likely still overperform gold, but not as it was in the past, where before, when silver was having a 2.5% gain, gold was up like 0.5. Rather, gold would have a 1.5% gain, or maybe even around the same level. Silver gains 2.5, gold gains 1.9 or 2.0. Those sort of possibilities, if that happens. I think that it's going to be very rare to see when gold goes up that the gold to silver ratio would also go up. Rather, I think it would be more likely to go down or at least move close to sideways. Okay, so thank you for watching this video and have yourself a great day. Bye-bye.